Listen to This Week in Money, Saturdays on Internet Radio at TalkDigitalNetwork.com. This week's scheduled guests from Chartworks, Ross Clark. From the Gloom, Boom, and Doom Report, Mark Faber. From WolfStreet.com, Wolf Richter. Plus, we'll have a company showcase update from American Manganese CEO and President Larry Ray. Don't miss This Week in Money this Saturday on Internet Radio at TalkDigitalNetwork.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thank you for having me.
I know you said the U.S. dollar was going to enjoy a pretty good rally this year. Did that happen? And what's going to happen?
Well, Jim, it's just beginning. I think I think it was right around the first of the year, we talked about, what we were expecting for this year. And one of the things, I think I said one of the big surprises would be the bottoming of the dollar. And that bottom is in place. The dollar's rallied nicely so far. But it was a major low, I believe. There was a major low due. In my world, it was a 4-year cycle low. So, any weakness in the dollar should be followed by further strength. And looking at it, I guess, inversely, the euro, there's a 4-year cycle, and, that cycle has topped, and we're going to see weakness there. At the same time, what is going on is, we had this tremendous, we've talked about it till it's just, I don't know what else to say about this tremendous bubble in equities and really all asset classes. Back in January, we saw the most overbought by some of the technical measures, some of the most overbought equity market since the inception of my stock data going back to 1800. And so there's absolutely no question that we're dealing with simultaneously the topping of the equity bubble, and there's also the 3-year cycle pop in commodities, and it's been no question, it's been holding on. We've continued to push into that top. I keep saying top. I'm looking for, I know it's pushing into the top, but we haven't gotten, just like with equities, we haven't gotten the concrete indications to say that we're there yet. That's the direction that we're going. The point being this: the dollar is quietly bottomed, and simultaneously, I think all other asset classes are quietly pushing into tops. I think that the push into the top in the commodities market is still underway. I think that the push into the top in the equities, we may have seen the top there. If not, there could be one more push. I don't know. That is being, that test is at hand now with these advances out of the February and April lows. And depending on what the cyclical structure sets up there, then, like I said, we may or may not have another push left. But I think there is a monumental shift in the dollar and all other asset classes underway.
With a rising U.S. dollar, what does that do to the price of gold?
Gold, the great debate has been in gold whether we had that odd, we've talked about that, beat that to death too. But, the debate has been whether we saw a short 9-year cycle low back in 2015 or if that low was still ahead. Well, because the 15 was so short, you had to give it the benefit of the doubt that the low was still ahead. Well, it's proven pretty much that, yeah, it was the 15 low, and you know, we kind of knew that was a possibility when we openly discussed it. Well, I've also said that if that proved to be the case, that it was not the most bullish scenario for gold. And that it was, quite honestly, one of the most pathetic 9-year cycle advances in history. And a few interviews ago, we talked about the fact that, you know, lead has outperformed gold in the same time period because, you know, all these metals move pretty much to the same cyclical rhythm. And there would have been a corresponding 9-year cycle low in zinc and tin and nickel and everything else at that 9-year low in 15, that, you know, corresponding with the 9-year low in gold. And if you look at all the other base metals, they've outperformed gold. I mean, that's just a mathematical fact. So, you know, it's not the outcome that I wanted to see for gold. It's not the outcome I think that any of the gold bugs want to see for gold, but it is what it is. Let me give you another cold, hard reality with this 9-year cycle advance in gold. We had the low in 2015, December 2015, and if you look at a chart again and just pull it up and look at it, it is what it is. So far, the high point for the advance out of that low was July of 16. Well, that's 7 months. And if my memory serves me correctly, we're now 28 months into this 9-year cycle. And typically this 9-year cycle peaks with the third or the fourth annual cycle within the cycle, if you will. In other words, the cycle is measured 9 years on average from low to low. And think of like an isosceles triangle. It rallies up for 3 to 4 years up, and then you have the remainder down into the next 9-year low, if you get that picture in your mind. Well, as we rallied out, in this case, as we've rallied out of what appears to be the 9-year low in 15, we got a top in 7 months. And so, you think about that, we're 28 months into the cycle, and the top occurred, you know, 7 months into it. So, you know, I went back and looked. I mean, you know, how many other occurrences have we seen that? 28 months into the cycle, and you're not at some sort of high or near some sort of high, and that it was, you know, occurred so soon. And there's only one other advance like that, and it was coming out of the 1993 9-year cycle low. Gold advanced into the I think the high was made in that case 6th month, as I remember right. It pretty much flatlined for 2 years, spiked a little bit into the 4th little annual cycle, and then collapsed into the 2001, 2002 9-year cycle low. And so, you know, I hate to be the bearer of bad news, but it is what it is. Yes, it's forced that we had an odd 9-year cycle low, and we have the top stands in 7 months, and it's flatlined, and yes, it's managed to hold up, but it hadn't gone anywhere. And so this is not good news for gold. So that all being said, I think that gold included, with commodities, with oil, yes, oil is held up and continued to push and push and push and push, and we knew that you know, that there's this 3-year cycle it's become very right translated, if you will. And let me go back and explain that. Let me digress for a minute. Think about the isosceles triangle. You have a low point over on the left, you have the high in the middle, and then you have the low over on the right. Well, if something is right translated, it peaks to the right of that center point. It's no longer an isosceles triangle. It peaks way to the right. Or if it's left translated, it peaks way, you know, to the left of the center point. Well, in the case of crude oil, it has continued to push and push and push into that 3-year cycle top, and so it's skewed the cycle to the right. So we know that the low is still out. The timing for the low is still out there at the end of this year, early next. But we've pushed far to the right, and it's just overextended the advance. It doesn't change the fact that it's pushing into the top or that the low is still due. And in fact, by some measures, not all, but by some of the technical measures, I'm seeing that crude oil is the most overbought now than it's been since the inception of my database, which goes back into the early 80s, late 70s, early 80s. So, again, I think what we're seeing is that things have held up a little better than expected with equities. It's taken a while for this to mature. We've seen the same thing with commodities. We've seen this lackluster advance, 9-year cycle advance in gold, and the dollar is quietly bottoming. And I think all asset classes are going to get hit.
We'll have more with Tim Cyclesman Wood right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, oil has topped $70 a barrel. Is this going to continue, or is this an anomaly?
No, it's going to continue. It's going to continue until we get, in my world, what we call a monthly swing high, and then, like I said, it's the 9-year cycle top, and the 3-year cycle top, and it'll cycle down into, the projection is that we have lower oil prices into the end of 18. Early 19. As of right now, top's due, but we have no sell signal, so it is going to push until we get the setup and some sort of a sell signal, and then some structural developments to cap that longer term top.
Is part of this fear that there's going to be an all-out big war in the Middle East?
There's always some fundamental something driving it. I pay that no attention because everything is baked into the price. And ultimately, until we get a technical sell signal, it doesn't matter what's driving it. It is what it is.
How hard is it to convince people that things go in cycles and it doesn't matter what kind of excuse we attach to it?
Well, of late, it's been very difficult because, the thing is, I've made this comment before, but, the longer something becomes abnormal, and the more skewed it becomes, the more normal then it it seems. If you deal with abnormality long enough, then by definition it kind of becomes normal. But in reality, when you stand back and look at the data all inclusive, it is an abnormality. It's an extreme abnormality. And so when we're operating in this environment of extremes, like, the equity bubble and the extension of this thing in the most overbought market since 1800 and somewhat extended advances into 3-year cycle tops and crude oil and so on and so forth, and you keep saying that a top is due and you're dealing with a parabolic bubble and all this kind of stuff, then it becomes I guess monotonous. It's kind of like the person that cried fire in the theater and there's no fire. After a couple of times nobody pays attention, and it's the same sort of thing. But there's no question we're dealing with extreme abnormalities.
We'll have more with Tim Cyclesman Wood right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, are you getting any signals from overseas markets? I know you like to look at Israel and Russia to give us a heads up. And also, what about hyperinflation? Argentina has now joined the hyperinflation club along with Venezuela and Zimbabwe. What do all these factors mean?
Well, I don't look at Zimbabwe and Venezuela, so I can't speak intelligently on that. I think in the U.S. and in general, we're setting up for deflation, and I think that that's what we're seeing already underway with like I said, the bottoming of the dollar and the peaking and of everything else. That realization has not set in yet, but I think that's the direction that we're going. As far as Russia, it's the same thing. The market, the initial setup is trying to take place. You look at the cycles, and I think we're pushing into a 4-year cycle top in the equity markets there. When I look at the Shanghai, there are some structural issues that tell me that there are cracks in the foundation, no question about it. The Tel Aviv has bothered me for a long time. We've talked about that before. Any of this stuff, I say that, it seems like there's always, I don't mean that sound the wrong way, but it sounds like there's always something rumbling in the Middle East. But before this latest round with Syria and Israel bombing Syria and all this stuff started this year, the market was warning us, the Tel Aviv market. Remember, we talked about that. I don't remember when we started talking about it, but I have said that something was up with the Tel Aviv market. And it is. Something is up. It's been a warning for quite some time. And to give someone a graphical representation of that, I've made the comment over and over and over again. If you're looking at equities, by and large, they ebb and flow together. The cycles, they move to a very similar rhythm regardless of what index or sector you're looking at. Of course, there's always something that's going to peak first and bottom first, and something that's going to lead and lag. But the general rhythm is all the same. For example, everything moved down into a low in 2001, 2002. Everything pushed into a top in 2007 with that extended 4-year cycle top. Everything went bust into either late 2008, early 2009. Everything pushed into 2014, 15. Most things topped in 15, some in 14. And so that cyclical rhythm is there. Well, if you look at the 4-year cycle low, in the U.S. markets, we had, on the industrials, it was in August of 15, and everywhere else it was in January, pretty much January, February of 16 was the 4-year cycle low. And if you look, everything has moved to higher highs following that low. Well, the Tel Aviv has not. It has lagged badly. Why? And the structure there does not look good at all. And then the same thing with the Russian market. Their 4-year cycle low, I think, was in 17 versus 16 in most other markets, and the structure there is bad. So there are cracks when you look at this, when you stand back and look at the bigger picture. And it's just taking a long, long time for it to all set up.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Questions for the show can be sent to info@HowStreet.com. You can also check out our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.